at that stage. We're aware of that guy sitting there jamming up the price. But take a look at what's happening to the deltas. You see what was happening to the deltas there? The deltas were getting less and less and less and less. Do you see that? That's exactly the same principle as counting 1, 2, and 3, isn't it, when you think about it? It's exactly the same principle, guys. When you start counting 1, 2, and 3, you start saying, wait a second, where the hell are the buyers? There are no buyers. There's no buyers to be found. So what does that tell us about where we're at? Well, if we go back to the chart and we add in the volume analysis, and we start counting, we can obviously count this very, very clearly as 1, because that's the main drive from the open, wasn't it? So that was 1. And then we get into what looks like the peak of 2, and then the volume collapses. So there's a very, very high probability that if we go anywhere above that price there, we're going to see a 3. Anywhere above that price, there's a high probability that 3 is going to appear. And obviously that's exactly what happens. We go above the price, a 3 appears, we sell it, and a 3 appears and 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 we sell it, and we've just been selling consistently those 3 points. And obviously now is the case of trying to get through this jam here. And if we can obviously get this over upside down here, we could be in big shape to make basically a full measure against that sell at the top edge now. And as I said, even in a small micro world of 20 contracts, is it about $50, Kim, for a contract on the micro? It's about 50, I think it's about $50, guys. I'm not sure. But anyway, even for a small contract of $50, 20 contracts is costing you $1,000 margin. A couple of dollars for commissions. A couple of dollars for commissions takes you up to about $40 on that trade. And you can see that trade's already $380 up. So for $1,000 margin, you've just done 30% return on your margin, and you've taken a commission of about $40, $50, and it's now making $390. Make that $500 now. $500, guys, on a silly little trade like that. Perfect, isn't it, when you think about it? And the good thing is, by putting in this, there it is, $500, look. And I never even sold the top edge. I just put it in because I knew that there was a lack of any buyers showing up. Because there was a lack of any buyers, I knew that I could pretty much sell it anyway and I was going to make money, right? So you can see how it plays out. You can see how this trade evolves, and you know, and when you think about it, I'm not even perfecting. I'm being as bad a trader as most retail traders in these kind of examples. I'm not trying to take the top edge because I was in the top edge for my own account. But I wanted to just add in because I could see that there was no buyers coming in and lots of sellers. And I thought, you know what? This is going to break that 345 this time. This is going to break the 345 this time. And it did break the 345 this time. And it was a good trade outcome. And again, you can see that this trade ended up making $800. $800, guys. $1,000 margin, slightly more. But so you made $800 profit. $1,000 margin, and because you were able to build maybe into a position, remember your profit and loss would have been far better than that, because I just took the trade halfway down the line because I was selling the real money account at the top edge, and then I was just adding in this bit of selling so that I could show you what was happening. And your commissions obviously on that is what, $50? See, $50. You're still making a net profit of $750, and you were able to layer into that trade $750. Every trade from that high, and we've had 4 or 5 of them, has made $100 plus change at least. So you've done well over $1,000 on that trade so far, just off a top edge on a mini micro account, which is unbelievable, isn't it?